Yeah, welcome everyone, and yeah, thank you for participating. So we'd like to give a little bit of a talk about the collision of financial markets, or the collision that we currently see, and that we do see very actively, both when talking to our clients, but also sort of what we're driving forward and what we're seeing in the market. And yeah, so with me we have Simon from Cashlink, and maybe you just quickly introduce yourself.
Yeah, sure. Hi, Ron. Simon. I'm head of business development at Cashlink, and Cashlink is a Frankfurt-based tokenization infrastructure provider. So we provide the technical infrastructure for bringing securities on the blockchain. Very importantly, we are also so-called crypto securities registrar. So we basically issuers can basically appoint us to manage securities on the blockchain, and the securities are actual securities, MiFID II securities, and also securities under German legislation. We are market leader in Germany. We have done around 300 issuances so far with clients such as DZ Bank, KfW, Deutsche Bank, and many others. And yeah, very happy to be part of the presentation today.
Yes, and so my name is Dolf Diederichsen. I mentioned this already in the panel. So we provide easy access digital liquidity to financial institutions. So what that means is we provide crypto trading to banks and brokers. We enabled the first securities trading broker in Germany to add Bitcoin and other cryptocurrency trading to their product offering, and we have expanded ever since. So typically it's always B2C setups where we have a bank or a broker as our client, who then has retail or institutional clients behind them, where we enable them to trade digital assets. And I think for us, what we're seeing now in the market, and that's the I think exciting collision. So we're calling it. So we have, on the one hand, we have the crypto asset trading world, and that was historically very, very different from the securities trading world. So you had new players entering the market, trying to build infrastructure around trading crypto or digital assets, and you had the massive and huge traditional securities markets dominated by super large international institutions. And for the longest time, those two worlds were completely isolated and separated from each other. So you had the crypto players doing new things on new platforms, and you had the existing industry looking at this and sort of not really being sure of what to make of it. And then at some point seeing that a lot of their clients were already trading crypto products, so they could see on the bank accounts that there was like activity happening of their retail base, but for the longest part they weren't really participating. And then that did change a couple of years ago. Once regulation was clear, I think for the last 4 to 5 years, we've seen more and more traditional banks and brokers add digital currency trading to their portfolios, to their products, and we also see that the crypto asset platforms, so the crypto natives or digital asset native platforms, are also looking at traditional security markets, and that's obviously in the sense of tokenized securities. The question is that they're bringing to the table is, how can we leapfrog what we're seeing in traditional markets, and how can we make a difference and bring value to the table without just replicating what we're seeing before, but trying to then move beyond the current state of affairs. And I think what we're seeing in the long term is that at some point we will see all assets on chain. The question is, how long will it take, and what will be the path, and who will be the players, and what will be the technology? Yes, for sure. But I think the movement is there, and in the end, it's network effects. And the question is, which player, platform, technology can achieve these new network effects best? The cost advantage is there. It's just the question: how do you kickstart this? And so for us, the question is, how can we participate in this, and how can we support this, and how can we try to help shape this? And I think what we have noticed that on this intersection, there's a lot of movement happening already. But in many cases, if you just tokenize something that already exists, the question is, what are the benefits and that you can bring to the table? But it's also it's really a question about products, and we see a lot of examples in the markets where this is now happening. So you see more new digital asset native players who then add over time securities products. They try to get the licensing in place, they try to find products that work, and try to thereby broaden their offering that they have to their captive clients. And you see more and more traditional players who have who come from the traditional world, who trade large amounts of traditional financial instruments, who then gain digital asset capabilities, tokenization capabilities, and add that to their portfolio and see how they can make use of this new tech and provide an offering to the market. And I think that's addressing the same issue from two different angles. I think what's really exciting and what's shaping the market. What we do find, however, is that product is an important topic, and that's why when we have been talking to our clients can do MiFID products. They trade all kinds of securities already, and at the same time we enable them to, in many cases, to start trading digital assets and crypto products. So the question is, how can we also enable our clients to then move into this world of tokenized assets, and how can we also warrant them to invest into tokenized trading infrastructure? And that's, I think, also a discussion where we found that Cashlink has the same discussions with their clients, because obviously they also want to enable their clients to be able to settle and basically be present in this world of new tokenized assets. And what we found was that there was a severe lack of products. So additionally, we wanted to just take tokenized securities, offer those for trading, use our distribution platform and our the clients that we already have to just offer new products to. But there are, sort of the product side is a bit lacking. So we came up with the idea, let's just, if there's no products, let's try to, at the beginning, just issue our own products and sort of bring something exciting, new to the market, where the clients have then a reason to add the capabilities to do tokenized security trading and settlement. And once they have the capability, it's much easier to also then expand the number of products. So what we are doing is that we are issuing what we call Hyphe Bitcoin bond. So it's a product that tracks the price of Bitcoin, but provides additional yield on top. It will be a tokenized security. It will be MiFID regulated, and thereby the clients that will trade this and our own product will then have to have the infrastructure available to then also do all kinds of new and additional tokenized securities products on their platforms. So the way it will work is just it's also, since you need to structure it in a way that it also makes sense, that it's easy to add as a product, so you don't want interest payments which are complicated. So we say that the yield component will be offered as a discount. So there will be a Bitcoin price, and then this product will be then priced as a discount, and the discount then would over time shrink, and the investors would make that discount as the part of the yield, and it would converge then at the Bitcoin price, and at the end you can even redeem the product for Bitcoin. So it's basically you get to have an option to get yield on Bitcoin in a tokenized security product that we will offer. We did launch it to the press, and apparently it was newsworthy enough to print it in the paper, and we can't wait to actually get it starting to trade pretty soon. But maybe also, I think, since it's a new platform and a new settlement infrastructure, I think it would be good, Simon, to also from your side explain a little bit what's happening in the background and what the partners are actually integrating in order to enable the settlement of this product.
Yeah, 100%. So, I mean, at the end of the day, like if you look at these two worlds that Dolf described pretty well, right? Like the crypto brokers and TradeFi being kind of collisioning. What does it mean if you want to get such a product, or also any other tokenized product, to an end investor and offer it maybe in your end broker app, right? And like a lot of people think that you as a broker, as a custodian bank, or as a TradeFi institute, you have to provide wallets to your end investors, you have to connect to the blockchain, and so on and so on and so on. You can do all of that, but you don't have to. And like what we are currently seeing, and like how we also set up our network of participants that are part of our register of our Cashlink Connect network, is that basically the custodian bank and the issuer are like the two most important players actually in the value chain, because the issuer obviously brings the product on the blockchain and issues it as a token and distributes it to a broker via a market maker or via an exchange, and the custodian bank then holds the instrument on behalf of the investors. This is the same way that also today all of you have securities in your securities account. A custodian bank holds these in your name and is basically registered at the CSD, the likes like Clearstream or Euroclear or others. And this is basically the same way that we are replicating financial market infrastructure but that the custodian bank basically settles against us and is connected to Cashlink as a registrar and doesn't have to connect to the blockchain directly. And that way also end investors, they don't even see that the product is tokenized. They don't need a wallet. They just log into a securities account and see ISIN 1234. I have 10 units and can trade it against an exchange, against a market maker or whatsoever. And that makes the entire process very easy because for the custodian bank, it's also just a traditional security. They have a registrar, a notary service provider that is responsible and also liable for everything that happens on the blockchain and make sure that the integrity and the life cycle of the security is efficiently tracked and recorded. Of course, the custodian bank has to requires a wallet to hold the securities and also sign transactions, but everything else basically happens then also like in the same way as we do also security settlement today, just that you do not need CSDs anymore. And this brings a lot of flexibility into the value chain because the custodian bank as well as the issuer, they can choose how they want to settle. They can use APIs. They can also settle directly on the blockchain. This is like how some of our clients also setting up processes. They don't use an API. They settle via ERC20 interface, right? And this is the beauty what this technology also brings to the table. It removes systems and removes fragmentation that we have in traditional financial market infrastructure. And all of this in a super regulated way, based on a regulatory framework in Germany, the Electronic Securities Act, but also compatible with the DLT pilot regime or similar regulatory frameworks that we have in other issuance jurisdictions such as Luxembourg or France or Spain, where there are similar legislations, as the creation of a security is always national law and not European law. And yeah, maybe questions in a few minutes. Maybe also kind of, telling you guys what that means for the market, right? Like traditional financial market infrastructure has really not been evolving at all. In the last decades, the front-end experience has changed significantly, right? You can trade very easily via any neo-broker app, via your TradeFi apps and so on. But the back end of financial market infrastructure has barely evolved. So we have still very fragmented systems. Until 3 or 4 years ago, until the Electronic Securities Act was created, securities still needed a certificate. And even today, most securities still are stored in a paper-based security in a safe, which is insane. We are in 2026. We don't need paper-based global certificates anymore. So this is changing anyway already, but it shows how slow the innovation has been. And now we have, through regulation and also through the technology, the possibility to just create a new financial market infrastructure with new players that also bring competition to the market, that bring new technological solutions on the market, and provide the infrastructure where you have asset and also cash on the blockchain, and also provides the flexibility to settle in a stable coin, in a CBDC, or just a normal fiat. And this is the beauty when you have a smart contract with a regulated registrar such as Cashlink, and on the other hand you have a broker, maybe one broker, traditional broker, they settle in fiat or they settle in CBDC, and you maybe have on the collision on these markets a crypto broker that settles in stablecoins. And all of this works, all of this is interoperable and just provides a lot of new ways, such as 24 trading, such as on-chain instant yield calculations, instant yield payouts, and in the end of the day also creates an innovative environment that I think we also need in Europe, because Asia is not sleeping, US is not sleeping. And if you look at the global news, particularly in the US with New York Stock Exchange, with all the crypto players, there's a lot of stuff happening, but not on such a regulatory basis that we have in Europe. So we still, I would say, are ahead, but we also now have to come into the doing, which we are doing together. So I think it's going to be very exciting. And for every bank, I think, in the room, and any broker and any asset manager, they should really take a very close look at how these setups also affect or may affect their current way of doing business.
Yes, and I think maybe it's also underappreciated how much cost benefit this will bring. And the discussions that we're seeing is that both the issuing is much cheaper, but then also sort of the settlement for the brokers is significantly cheaper if you do the tokenized route. But the issue is that there's just not enough products out there. And why would you build something and you build new infrastructure if there's no products to trade on? And that's why we believe that with our sort of bridgehead product of a Bitcoin bond where you get Bitcoin plus an additional yield. We have seen that this is a very, very exciting and interesting product on the DeFi world. We believe that we can bring to our broker clients sort of the nudge for them to invest into this infrastructure to get it ready and live. And it will not be the last product that we will be launching. So thank you very much. I think we have, a few more minutes for questions if there's any from the audience.
Any questions? I'll come over and join you with the mic. No, we are recording, that's why the mic is needed. I know you have a loud voice, but please wait for a second.
So Peter Schuttmüller from Dicker Investment. Just two short questions. 24 settlement is nice. So my question is, how do you settle a bond with an institutional investor 24/7? And the second one is about settlement stablecoin. Behind stablecoin, there is fiat money. So could you just elaborate a bit on that? How you do 24 settlement if it's at the end it's fiat money cash settlement?
So maybe I just do the settlement first, and then you can do the stablecoins. So for us, so we trade with brokers that are very used to the T+1 or T+2 settlement, and we actually early on in our client interactions, we aligned crypto trading and made crypto trading exactly look like TradFi trading, because you otherwise had this the settlement issue. We are not even we're not big fans of instant settlement, because they're like they are much more complicated. So we like the T+, whether it's T+1 or T+2. That is a question that also depends on the settlement cycles and other instruments. But for us, we want to trade and we want to make sure that we're integrated, and we then happily sort of do the settlement cycle exactly as our clients want it. So usually in the securities trading setup, that would be T+1 or T+2 at the moment, and then moving to T+1. And for stablecoins, I think that's better for you.
Yeah, maybe just to add there, because you also asked specifically for institutional issuers and also investors. I guess like they will probably not settle in stablecoins because they don't want the counterparty risk, right? But what we are currently having in Europe is that central banks are offering so-called CBDC. Like we had that with the ECB trials in 2024 with Bundesbank Trigger Solution. We have this with Pontis by the ECB coming up in October 2026. And just an example, today was a press release by DZ Bank. They issued a so-called smart bond with also an institutional buyer, and they was just released like I think half an hour ago, also including a paper, and they issued and settled in central bank money within 35 minutes. And I think this is a huge game changer. We see it also maybe in other forms of money, right? Tokenized deposits, for instance, like these big investment banks at JP Morgan, for instance, they have their own ecosystems basically where they, for their own clients, basically in siloed systems, allow settlement also in tokenized deposits. So this is something that can work for a lot of institutional investors, but of course not for all.
Any other questions? Amin, no question. Radko, no question. Okay, then thank you, gentlemen, Simon and Dolf, for this overview.